markets have definitely shaken off the weakness that we've seen all of last week, regaining some of their earlier momentum. But are the correction fears overblown? Will the new year bring more cheer as far as the Indian equity markets go? To discuss that, we have with us this morning Hiren Ved, Director and CEO at Alchemy Cap. I'm also being joined by Priyank on this conversation. Thanks so much for coming down to our studios this Monday morning. Let's start by talking about 2015. 1 week away from the new year. You're all looking excited about it. In terms of a range for the market, what are you working with?
Well, I think, we should see a good market in 2015 as well, though I personally believe that it's probably going to be a very volatile year. I think while the oil price fall is a big positive for India, you could see some negative impact of that happening in some of the oil producing countries. So probably that could induce some level of global volatility. But I think on the whole for India it should be a pretty strong year. I think the benefits of lower oil prices should start to reflect in the next year's budget, not this year. And hopefully the government will have some more fiscal space to kickstart the investment cycle. So next year should be a good year as well.
Hiren, we speak to a lot of foreign investors, on our channel, and the one common theme that everybody talks about is that they want to see reforms, start. They want to see the government actually start doing some concrete steps. In that limelight, rather in that backdrop, we've seen the winter session that's about to just come to a close as well. Your reading as to how we've seen the reforms, how we've seen the winter session, and also GST.
Well, frankly, I'm not disappointed with the reform pace at all. I think that any new government will take some time to settle down. I think that today, I think the intent is very, very clear. When the government says that if they can't pass the bill in the Rajya Sabha, they will probably come up with an ordinance. So that tells you very clearly that the intent is there. The ability, obviously, they are constrained at this point in time because you don't have, a majority in the Rajya Sabha. But I think in the next 18 months or so, you will have that as well. So the idea for them would be to execute as many reforms as possible, given the current constraints that they have, right? And I think people should wait for the budget. Also I think wait for, it's quite unfortunate that the winter session, was completely washed out, but then, the same strategy was used. The same strategy was used by the BJP the last time around when UPA was there. So I think you get the taste of your own medicine sometimes. But I think that as the session comes to a close, you will see a pickup in reforms post the Parliament session. It looks like that in India now, not much is achieved during the session and a lot is achieved between the two sessions.
I just want to take a step back and talk about, you were speaking about the Indian markets and the volatility that we're seeing.
Yeah.
Would you say in terms of what's happening globally, the worst in terms of the correction is over?
Well, it's difficult to say because, I think that the structural problems abroad have not been solved. So what happens is that every time some shoe drops, a central bank comes and pumps more liquidity, and that gives you a little more time. The good news is that the US economy is doing quite okay. The bad news is that Europe and Japan are both struggling, and now to add to that, I think there will be even more challenges in the Middle Eastern region, right? So they were big net surplus economies. They will now go into deficit. Their budgets will be cut. So it's always going to be a tough environment. So I think that you can never say that the worst of the global volatility is over, and that's why I said 2015 could also be a volatile year, though it will be a good year overall for India.
So in that space, let's talk about sectors. And I mean, 2014 has been a year where you got the banking pack support the market in the second half. The first half probably belonged to some of the oil and gas majors that really provided a little bit of comfort as well.
Right.
2015, top themes to focus on?
I think, 2015 should see, to my mind, finally the long-awaited fall in interest rates, right? Okay. So I think good quality interest rate cyclicals should do very well. Especially the ones where the balance sheet is not constrained, right? And if the government is able to kickstart sometime by the middle of next year an investment cycle led by public investments, or egging the PSUs to go out and spend money using their cash balances, that should revive the industrials in the second half of the year. So I think amongst I would still be positive on tech and pharma, because I think at the margin the rupee is depreciated. Also, I think that they will continue to show strong earnings growth, and then during the second half of the year, as interest rates are cut and hopefully the government starts to spend money, you should see the cyclicals take over in the second half of the year.
But is your view reflected across the broader markets? For example, we're speaking with Mindtree in a moment. Do you see mid caps also contributing to this rally? I
think so. I think at this point in time, the mid and large caps are both kind of fairly valued. There was a time last year when mid caps were very undervalued, but we've seen a very strong rally in mid caps. So I think, to my mind, again, the first half will belong to the large caps. The second half of the next year should belong to mid caps, because they will have to take a little bit of a breather, and that's how typically it happens in a bull market, right? I mean, it's a merry-go-round. So the large caps move first, and then the mid caps follow. But I think, yeah, I mean, the good quality mid caps should do well next year as well.
You touched upon the fact that the way the macros could shape up, rate cyclicals probably is a play. What about rate cuts then? When we talk about, because the industry, or rather the corporate segment's been screaming for a rate cut, the governor's been holding his ground there. Your expectation, I mean, as you've been asking on the channel as well, is it more about the timing or the quantum that's going to be important from now?
My sense is that apart from inflation, I think the RBI governor was also worried about this whole global volatility in currencies, right? And he didn't want to kind of preempt and do a cut. I mean, just imagine if you would have done a cut and you had this kind of volatility, the rupee would have probably depreciated even more, right? So I think he's got one eye on the fact that he sees global volatility. The good thing is that the Fed has now said that probably interest rate hikes will not be very imminent into the near future, but at some point in time that's going to happen, right? So I think once, my sense is that post the budget, once he sees the fiscal roadmap, I think you should see aggressive cuts by RBI, but going more, post the first quarter of next year.
We've seen a lot of macroeconomic data, and we were just talking about reforms, but such a mixed picture emerging, whether it's IP or retail inflation. How are you reading into all that data we've got of late?
Well, I think manufacturing saw a little bit of a pickup. Consumer demand saw a little bit of a pickup post the elections, and then it's kind of dropped back, dropped off again. The fact that we have no inflation now tells you that the producers don't have pricing power. So there's no demand, there's no real raging demand that is there. Also, I think incrementally, the e-commerce segment has impacted. And there actually instead of prices going up, prices have actually gone down, because you're getting things 20, 30, 40% cheaper. So there's no consumer inflation, there's no producer inflation. And it tells you that demand is still very, very soft in the economy. And I think as for companies and manufacturing companies, as raw material prices fall next year, there is always a lag. I think either manufacturers will pass on that benefit, or some of them will keep it, but there is going to be very little scope for price increases anymore now. So I think inflation is all for dead in India, according to me.
It's an interesting viewpoint, okay.
Yeah.
That's as far as the macro side is concerned. But as we wrap up our conversation here, and I have to ask you this. I know you hate this question when I ask you a certain target on the index, but let's talk from a range point of view. I mean, this one's been a fantastic year in terms of 2014, good gains coming in. 2015, you maintain the fact that, it could be volatile, but in terms of a range that investors can actually expect in terms of returns, what would you say?
See, I mean, if you go back and, look at the previous bull markets, right? people always ask this question, you have one strong year, then what will happen the next year?
Exactly.
Right? But typically, you know, in a good bull market, you have 2, 3, 4 years of back-to-back positive returns. Now, you know, we've had a 30% return year. Now, whether next year would be a 30, 40 or a 20% return year, it's very difficult. But my sense is that, you know, you could see a 20, you know, maybe 20 to 25% return on the index from the current base. So that should be pretty strong. I think, you know, I think with rates down, that should support the P's in the market, and hopefully earnings should also catch up towards the second half of the year as the impact of lower costs come into the P&L and balance sheets.